Okay, and we are back streaming live. So we did generate a bearish fair value gap up here, um, the 800 level. So I'm hoping we can get back in there and just, tap it before we go lower. So I'll ride it up. So I'm expecting 805. Actually, I should probably put my sell order in there right now in case we get a spike up. Yeah, we should be able to hit 805. You know what? I'm going to put my sell order up even higher. I'm going to put it at 812. What I'll do is I'll lock in my profits here in a minute. There we go. Okay, so I'm locked in now. If it wants to, oh, I think it just kicked me out. No, it didn't. My stop didn't go into place. Let's try that again. Sell stop. There we go. Okay, so I've got a sell stop in there, so break even. We'll see what it can do. Like it might not be done on the sell side. We didn't actually tag that lower trend line at 740, but oops, I just got stopped out. Break even. So I'm gonna wait for another dip down and then I'll try again. Looks like news is out of the way for this morning at least. Um, so actually, not terrible news. So we should. I don't know. Yesterday seemed like a chop day, so I mean, today we might do the same. Hmm. a lot of times on the second bounce we lose the support, or it make at least the market like makes us like to think that we lost support, so everyone panics and starts shorting, and then it reverses and pops. So that's kind of what I'm looking for right now is um, losing the trend line and then getting back above the trend line, getting back into the channel, and then going for the top of the channel. So my target on this is going to be definitely this fair value gap up here. 810 is definitely, it'll probably even go more than 810, but that's assuming we can get back above the lower trend line, of course. What does that have to do with it? What did he say? Oh, I don't know about that. I mean, the market's doing exactly what I expected the market to do. It's chopping around, and it's okay. Well, now it's making another attempt to make lower lows here. So I think I'm gonna. I don't like how slow or how long it's taking for this to reverse. Like it should have went down, found the bottom and then immediately gone back up, and it's just slowly bleeding lower. So I did manage to get out of my trade green. I got stopped out twice, like plus $5 each time. But it looks like it might want to test the 700s. So I think what I'm expecting is a pop down, a pop back up, and then a break back above the lower trend line of the channel. And then once we're back in that channel, then we're good to go. And I think we can go all the way back to the top of the channel. But until we actually find a bottom, bounce, turn around, attack that lower trend line of the channel, and then get back into the channel, I think I'm just going to sit on my hands. Even though there's lots, it's very tempting to go long down here because it's a discount underneath. Anything underneath that trend line is going to be a nice discount. But it obviously comes with a little bit of risk. I'm just going to throw a number out there, 768, or sorry, 668. Um, I see that as a potential for a drop. So we'll see. I don't know if we get there, but we'll see. Well, but are we though? Are we really going down? I don't know. I don't think so. I don't think we are. I think, yeah, no, I know, but I really do think we're going to go back into that trend, that channel, that lower channel, the channel that we were in. I think we're going to go back into it, but I mean, I could be wrong. I could be wrong. Well, I'm tempted to go long here just to prove you wrong, but I'm going to just be patient a bit longer here. Let's look at the 1 minute. Yeah, okay. So I switched over to the 1 minute just to get a little bit more granular. And we're right now the 5 period and the 10 period moving average is keeping us pinned to the downside. So I would say let's wait for a cross above the 5 and the 10 before we consider any longs. So, um, oh, you're in a long? Hmm, okay. Well, I wouldn't panic at this point. I mean, it's not probably not a very comfortable feeling, but to me, we're just sort of slowly grinding down. Um, Let me see if I can draw a channel for us in here. So this is actually going to be the third. I like long at 695 to be honest. I might actually take the long at 695. I just want to see how aggressively it's going to go down, or if it's just going to spike down and then try to go up, or if it's going to keep bleeding down. When you entered your long, did you have a stop in place, or did you just think like, oh, I'm going to go long and I'll worry about the stop later? Yeah, yeah. I always got to have a stop, somewhere in there, and then I quickly will analyze the trade and decide is this stop placed appropriately, or should I have it closer? Like, do I want to increase my risk or decrease my risk? So obviously, farther away, you're going to increase your risk, and the closer you are, you decrease. So we're at 706 now. 3 seconds left on this candle. There we go. There's a little bit of a wick. I'll take a shot. So my stop here is going to go down at around 680. The trade is already green, so I'm going to move my stop up immediately to break even. And I think we might have caught the bottom there. That was a really nice wick. I'm moving my stop up a bit more now. It's probably going to come and take me out, which I don't care because I can just re-enter it. There we go. I'm out 15 bucks. So 714 looks like a good. Oh, it's gone below 714. So that means we're probably going to go lower. So yeah, my Phoenix deviation is down at 688. So that would, you know how we sometimes talk about good price, okay price, better price, best price. So I think I like where it is right now. It's a good price. It's just not the best price. So I'm looking for, so we have an order block up at 774, which we could probably hit unless things, turn sour, right? If we're not falling like a rock, right? We're not dropping out of the sky here. We've just been slowly pulling back. Now I want to see us attack that lower trend line that we broke down through and get back into that channel. That's what I'd like to see. But if we continue dropping like this, that's not going to be very good for us for that type of a trade. So we have a new channel that we've just formed here. I've got it marked in orange. And this is the third attack on that upper channel trend, the upper trend line for that channel. This is, if we get up there, it'll be the third attack. So there's a pretty good chance that we're going to break above it and maybe see like a nice little breakout. But 700 is a pretty big number, and we haven't quite hit it yet. So I'm gonna say maybe we go one more drop down here to 688, 684, and I'm gonna actually put an order in right now. And I'm going to put a 20-point stop there. So 80, 70, 80, 70, 60. So there we go. Okay, so I got a buy order in there with a 20-point stop. It does seem to be holding. So we tagged 700. So now the question is this where everyone piles on the trade and the market's like, oh, look at all these buyers, let's take their stops, and then it pushes down to the 80, 70, 60, 50 range. That's the big question of the day, right? Is how far does it want to overshoot the 700, or is it going to just touch the 700 and go? It doesn't look like a touch and go. It looks like it wants to go a bit lower. Yeah, but you see it's not breaking down just yet. It's taking its time about it. So Phoenix average deviation is at 682.25. I'm gonna take my buy order off the table just for a sec, and I'm gonna do a little bit of back testing here. Okay, so I have a new downside target because we have a liquidity pool, pretty decent one at 682, but we have an even larger one down at 599. So that we could see like another 85-point drop. So that is a little bit worrying. And if I'm being honest, we've been trending up for quite some time, and we've already had 1, 2, 3, 4. This is the fifth bounce. This breakdown that we just experienced was the fifth bounce on the lower trend line, and we finally broke through. So I would still like to see us go back up and retest that channel, the lower trend line of that channel at what? How could you blow an EVE out on? Were you trading minis or micros? Ouch. Right. Well, so yeah. Yeah. Well, it came down to 682. That's exactly the number I called, 682. right? 682. That was the overshoot. So it came down to 700. It let all the bulls buy, right? Buy at 700. They bought it, bought it, bought it, and then it overshot. It pushed it down even further just to take all those bulls out and stop them all out. Pushed it down to 680. Turn around and now it's going to probably tear to the upside. I'm not jumping in long here because again, I just love trying to think of all the ways the market can screw us, eh? So if I was a bull and I was long and I see this, what I'm seeing right now, I'm seeing a breakout of the upper trend line of this channel that we've been in, like we've been going down, and this is the third attack on that upper trend line. So this is a good area for a long. And that's exactly why I'm not going to take the long because the market knows this and it's going to do everything that it can to shake those longs out. So I'm going to wait for one more pullback to the 700 area. I am getting a long signal on my bot, but again, I'm not going to take this trade just yet. Looks like we're also getting a crossover on the moving averages, the 5-period and the 10-period moving averages. That's the pink and purple lines. We haven't crossed over yet, but it looks like it's trying to cross to the upside here. So here we go. Here's the fake out, right? This is where everyone that went long is like, oh shoot, what happened? I thought we had support at 700. I thought we were going to go higher. What's going on? And the market's just laughing at them right now. So okay, so this is where I'm tempted to take a long right here. Let me see. I'm going to draw a fib in here. Did we hit 50%? Yes, we did. All right. I'll take a nibble. I'll take a nibble. I'm 1 micro long. If we come down to 782 or 784, I'll add. If we go down to 650, I'll add. If we go down to 740, I'll be a little concerned. So let's see what the market's going to give us here. I'll throw in a stop at 680 for now. Yeah, it looks like it wants to go a bit lower. So we're at 700 right now. Again, nice bounce area. That was the third attack on the upper trend line. So I do like that for a breakout. So I'm not too worried here. I do feel we're going to break out of this channel. Um, Most of the time, more than 50% of the time. Third attack on upper trend line of a channel is going to break to the upside if it's a downward channel. So this is a downward channel. We're attacking the upper trend line. We're actually breaking out of it right now as we speak. So yeah, I like this trade quite a bit actually. I'm going to move my stop up to break even. I don't want to, but I'd rather be green than red on this trade. And I'm going to move up to here. So we could. This is where you wanted to get in. This is where you'd want to get in. But anyway, oh, I just got stopped out. Darn it. All right, plus another 20 bucks. So I'm not going to cry about it. Yeah, yeah. So that was a classic example of trailing my stop too tight. I knew that I was taking a risk there by trailing my stop so tight. But I was just, I don't know, I was put off by the aggressive selling, and I was like, you know what, no matter what happens, I'm taking some green. So I got my green. It's just not nearly as much as I could have had if I had kept my stop a little bit further. So we're above the channel, like the upper channel trend line. So we're above that, which is bullish. But we're not exactly breaking out, and we haven't taken the high. We haven't made a higher high. So we'll see. I don't know I mean, sometimes this can fizzle out, right? Sometimes it'll fizzle out. Let's see. Trump's talking right now. Okay. Well, that's a reason to not trade for a few minutes. Yeah, so we're failing. This is either a retest and a breakout, or this is just a. Oh yeah, darn! It looks good. We're back to 700 again. Yeah. So I'm gonna wait for either one of two things to happen here. Either we're gonna break above 720, make a new high, or we're gonna break below 680, make a new low. So I'm going to wait for one of those two things to happen before I take another position. What I'm hoping for is a push down to 680, maybe even 650, and then I'll take a nibble down there around 650. But this breakout of this channel still looks good though to me. I'm tempted, but I'm going to wait for confirmation. I want to see a higher high. I think if I make one more green trade, I think I'll be done for the day. Because I don't want to give any of my profits back. So I'm at 195 right now on the day. So pretty for a micro, that's pretty impressive. That's like if that was a mini, I'd be up 2 grand, right? So, but for a micro, I'm up 195 bucks. So I think I'm going to go one more trade, see if I can get that over 200, and then or call her done. Yeah, but you're not saying anything that the whole world doesn't already know. It's just, big deal. Yeah. Yeah, that's good. I mean, that's an edge for you, right? If you take that information and use it to your advantage, right? Yeah. All right. I want to check out my 5-minute chart, see if I can spot any new FEGs in here. We did get a really quite a nice wick on that last candle was a nice wick there, and we haven't really gone back. Although right now it looks like we're considering it. So we're hanging around the 700 level right now, right? We dipped down. Yeah. Are you watching a live news feed or are you hearing him talk? Oh, I see. Okay. Yeah, honestly, I don't care. To be perfectly honest, I don't care. Trump can talk about whatever he wants to talk about. If the market dumps, I don't care because I know I have stop loss in place. So worst that's going to happen is I'm going to lose a couple $100. Whoop-de-ding, right? So I'm not going to let that stop me from taking trades. I'm a technical analyst, right? Like I like to analyze the charts and on a technical basis, and I trade what I see on the chart. So he can say what he wants to say. Like I'm looking right now, for me, a really good buy would be 648.50. Okay. So if he says something and the market dumps, I'll bet you it's going to drop to 648.50. So basically what I'm doing is I'm waiting for him to say something dumb so that I can get my fill at 648.50. So go ahead, say something dumb, right? It's all good. Bring that price down. Yeah. No, I didn't. Um, yeah. So here's the thing, guys. Based on this channel that we're in right now, I like it for a long. But here's the thing. We have a major liquidity pool below us. It's at 600. We have a Phoenix deviation at 650. So even though I keep saying how I would love to see it drop to 650 and I would take a buy there, I don't think that's a good price, but it's not a great price. Okay, there's still a lot more risk there at 650 because we have this liquidity pool down here at 600. So I'm actually gonna just watch it for a bit because I do like 650, but I like 600 even more, right? And if we can go even lower down to 475. There's another liquidity pool down here at 475. So you know, you got to keep those levels in mind when you're taking your trades. So I do like this trade long. It's just I understand that there's substantial risk below us, so I need to be really, I have to have appropriate stops, put it that way, right? I'm gonna have an appropriate stop. So switching, let's check out the 3-minute chart here. Okay, so on the 3-minute chart, I'm not seeing too much in the way of FEGs. We did have a couple on high, you know, earlier on. We had one up around the 750 area, and then we had one around the 800 area. So those are two areas where we could possibly revisit later today. If we're lucky enough to get back into that channel, that would be such a good trade. But um, I think if we were going to get back into that channel, we would have done it by now. So I don't know. We'll see. We should be able to get back up to the 730, 740 area at the very least. If we get above 750, 760, then I think we can probably make it all the way back up to the 800s. But let's worry about the 600s right now. We're at 675 right now. Things are starting to look a little bit better down here for a long. But I'm not gonna enter here. I think we can do better for price. I'm looking at 654 right now, 654.75. I'll throw a little eyeball icon here onto the chart if I can find it. Where is that eyeball? There it is. Okay, let's. Yeah. Okay, we just had another nice little wick. Oh man, this is tempting. Let's see. I'm gonna put that down there. So I did have another long signal on my bot, but I don't know that I trust it. The market seems to be selling off fairly aggressive right now. It just keeps making lower lows. So yeah, I gotta be careful with any longs here. Any longs would be just scalps at this point until we make a higher high, right? Once we get above, like if you just look left and look at the most recent swing high, that was 720. So until we get above 720, I wouldn't get too excited about longs. So the bot just took a long, actually. That's interesting. It wasn't a good price though. I would have waited. I think I like 750 area better. But it's holding. We got a nice wick forming on this 1-minute candle, and looks like we're going. I think I'm actually gonna just exit this trade early. Yeah, there we go. I'm out plus $5. The target for this trade is going to be 704.25. It's the order block. It's approaching right now. I just didn't like this previous candle's wick. I saw that as an area of rejection, so I'm sure price is going to come right back to here. So I just got out of the trade. It wasn't a very good entry. So here we go. We almost hit the target. We missed the target by 25 cents here. There we go. We just tapped it. So that trade's done. Now we're either waiting for a pullback or a continuation and to take out these highs. We actually have something interesting forming up here. These highs, there's a lot of wicks both from the top and the bottom, and they're all attacking that 719 level, 720 level. So we've got relative equal highs. So that's both resistance, but it's also a target. But you can see how we rejected off that order block. So that was a perfect trade. So I'm out of that. Now I'm waiting to get to reload. Right. I want to see us come down, make some new lows or some lower lows, and then I'll get in long again. That was a nice trade from the bot. You can see that on the stream. There was a long entry at 670, and then took profits at 705. That was like 35 points. That was beautiful. I didn't trust the trade. I didn't take the trade. I should have taken it, but I didn't trade it because of the aggressive nature of the selling that we're seeing right now. I was like, looks like a good long, but I'm just gonna pass. Here we go. We're attacking the order block again and having a little bit of trouble getting through it. But just the fact that we're attacking it again tells me that we're a little bit bullish here. So let's see if we can get up to 720 from 703. We're above the order block now. We just poked through. And we're rejecting again. 8 seconds left on this candle. Let's see where it ends. I think we're going to get a pop to 720. It's looking... Well, maybe I spoke too soon. I'm getting a rejection again. All right, new candle. Let's see if we can get above the previous candle's high. And we just did. So yeah, this looks like it might want to go a little bit higher here. Again, I was mentioning about all those wicks from earlier. There's a level of support and resistance right at 720. So I think that's a reasonable target. I'm not going to take the trade though because I just don't like the entry. I like the trade, I just don't like the entry. I think there's a much better entry down below, like 690, 680, 670, 650. Those areas would interest me, but I'm not going to go long right up here because this is an area where we could easily reject and go lower. So I'll wait. Also, we've got the Phoenix average sitting at 732.5. So there's another target for you guys. We're fast approaching 720. Let's see if we reject off of it. I bet you we get a big fat rejection candle right here. 720. Not quite. We just about hit it. We got to 717.5. But we're not. I don't think we're done yet. We'll go a little higher. We'll probably pull back now because I'm seeing a potential FVG forming. So we could see a pullback to 706.5. We did get a pullback to 710. We didn't quite make it down to 605, but I'm not. I think we'll come back. We'll come back to 706. I'm pretty sure. Maybe even 705 because the order block is there. So now we're kind of ping-ponging between these areas of support and resistance. So yeah, definitely not interested in taking any trades in this choppy area. If I was going to take a trade here, I would look to be shorting it at somewhere between 720 and 740 or 750. Somewhere in that area, wouldn't mind a short. We do have a bearish fair value gap up here on the 1-minute chart, right under the Phoenix average. So kind of like that as a target. Incidentally, that area where we were getting all those wicks, there was actually a FVG in there earlier. It's been sort of mitigated a bit, but nonetheless, we do have a tiny little FVG in there. There you go. There's your rejection. So we didn't even make it. We made it to 717.75. We didn't even make it to 720. And got a pretty hard rejection there. So yeah, I think we're going lower based on that. So I'm excited now because my next order or my next long entry is going to be somewhere down around the lows. 670 down to 650 or 640 would get me interested in a long scalp. Okay, we're almost getting to a point where the bot's going to be interested in taking a long trade. If we can get below, if we close below 680 and then get back above 680, that'll probably trigger the bot to go long again. Although, we use caution here on A longs, we're in the process of forming a new bearish FVG, and this candle is significant. This is not a small candle. This is a pretty large candle. So this large candle, I haven't coded this into my bot yet, but what I'm planning to do is when a large candle like this is detected, it's going to put the bot to sleep for 3 minutes. It's just me like, oh, large candle, okay, go to sleep. And I'll make sure that that'll force my bot to not trade for the next 3 to 4 minutes until the volatility sorts itself out. Because these big candles can just kill you. Like they will kill you, they'll murder you. So you can see how quickly the price is moving. So um, the area that I was watching was the 650 area, and you see how we just smashed through it like it wasn't even there, and we're now down to 627. So I'm actually starting to like a long here, but I mean, who wants to get in front of this freight train, right? Not me. I do really like a long right now, but I'm not going to allow myself to take the long. Oh, incidentally, we have that liquidity pool at 600. We're just 30 points away, so yeah, you definitely want to hold off on any longs here. I mean, you could. It's a great long. It's just really high risk because you know we're going to go lower. Unless you're okay with a 30, 40, 50 point, stop loss, then fine. You could start to scale in here for a nice long trade. But I would be a little bit more cautious. Let's see here. I'm going to adjust my trend lines a bit. Yeah, something like that. Okay, so we've broken down. We retested the upper trend line of this downward channel. It failed. We're now actually back inside of here. But you know where we landed? Look where we landed. That was a nice little trade right there. It was the Phoenix average deviation down here at 625. Nice round number. I actually tempted to take a little nibble here. Should I do it? Should I do it? Do we want a good trade or do we want the best trade? We want the best trade, right? So yeah, so even though this looks like a really nice long scalp, like really nice. I really like this trade, but I'm not going to take it because I believe deep in my heart we are going lower. So I'm going to wait for the next better trade. This looks like a really good long, but there's a better one just below us. So just going to switch to a higher time frame here. Have another look at this liquidity pool. I'm actually going to label it properly so it stands out a bit better. There we go. So we got a liquidity pool there, and then I also want to label the next one because there's no law or rule saying that the market has to stop at 600. So we would like it to stop at 600, but it doesn't have to. So if you were, Joe Blow average trader, or if you're an ICT trader that trades, looks at these liquidity pools as targets, you would think that we would get a beautiful, beautiful bounce at 600, and you would probably be right. Not just because we have a swing low there, but because 600 is a nice big round number. It's a mental number. But the thing is, we're expecting some kind of a sweep, right? We know there's a lot of stops down here. So even though 600 is a nice big number, I am not going to take a long at 600. I will wait for the sweep, and I want to see how low can we go. Is it going to be 590? Is it going to be 580, 570? Like I just want to see how low this is going to take us. So we stopped at 610, 611, and we're back up to 630 right now. So that was wow. It came down and then it popped 20 points up, right? So it gives you a kind of a idea of what might happen here, but I don't believe that for a second. We're not done. We're going to come back down, I'm sure of it. But I'm not that sure for the record. Okay, so beautiful fair value gap there. So there's a really, really good chance that we retrace at least 50% of this fair value gap, if not higher. Like we could actually go right back up to the trend line way up there at 730. But this fair value gap we just created is begging to be tapped. So on the next candle, which is in about 2 minutes. So I'm looking to see 650 in the next 7 minutes or so. But until that happens, I'm still watching the liquidity pool. And notice how we're still inside of this channel. These two orange lines is an older channel that we've been in for a while now. And this is probably the fourth or fifth attack by now. Let me see here. One, two, yes. So on the top we've got one, two, three attacks on the upper. So yeah, I think the next attack on the upper could go. We could get a retrace. So yeah, let's see how this happens. I mean, the news, I didn't find that the news was really terrible. Everything was mostly either in line or slightly beat. So no, say that again. Say that again. Oh, are you serious? Okay, but I mean, Tesla's not the whole market, right? I mean, look, let's have a look at FinViz and see what the market health looks like, right? Okay, so it's a 50-50 split. The technology sector is definitely in pain. So is the financial sector. Apple is the only outlier, right? Apple's up 1.6%, and the rest of the tech sector is down 3, 4, 5%. So and then, of course, everywhere else on the other side is mostly green, to be honest. All right, industrials, real estate, utilities, basic materials, healthcare, all green. Communication services is mixed. Financials mixed, but kind of a little leaning towards the red. Right. Nvidia, actually, I'm surprised to see Nvidia down. What's going on with Nvidia today? Let's check the news on that. Yeah, so this Musk Trump tiff is creating a little bit of excitement and drama in the market, but I don't think it's going to last. Honestly, when you look at the news, I'm not seeing anything jumping out at me saying, something bad is happening. So I'm not that bullish though, because you know, on the 4-hour chart. Oh, hang on, we just swept that liquidity pool. 593. Man, I'm so tempted to take a long here. I'm not gonna do it. I'm not gonna do it. I want to see us break out of this channel first, right? So what does that mean? It means we need to get up to, well, okay, hang on a second. I do see that fair value gap up there. Oh, so tempting. Let's see, we're at 607. If I took a long here, it'd be literally like a gamble. So I don't want to do it. I'm going to wait. It's a total gamble trade. Yeah. Let's watch this level down here. 572. I'm gonna check my news feed here. Oh, okay. So interesting. House Representative Norman says regarding the Senate bill, going the way it is, I don't see how we pass this bill by Friday. That's a quote. So yeah, there's a little bit of foreshadowing. Um, what else? Yeah, Trump said, if Doge looks at Musk, we'll save a fortune. So what else? Trump on the Russia-Ukraine war. We're watching Russia very closely. Yeah, Trump just likes to hear himself talk. Okay, you know what? I like this. I'm going to take a little nibble here. I'm going to go long. We're getting a little bit of momentum here. I'm going to set my stop loss below the low just to protect myself. It's a bigger stop loss than I'm comfortable with. I don't love these 10, 20 point stops. I prefer much smaller stops. But the fact that we're not dropping like a rock right now gives me some hope that maybe we get up there. Um, let's see, where am I willing to add? Okay, I'm going to move my stop down to 644, and I'm going to put a buy order in at 560. That's just on the off chance that we do go down there. So it looks like the 5 period and the 10 period moving averages are looking like they want to cross each other. So we just need to hold on and see if we actually are going to get across. I do like this as a long, but I see a pullback coming to down to 613. So if you're interested in taking this long, you could put a buy order in at 613, put your stop below the candle's low, which is 605. You're literally going to be risking 8 points. So it's a pretty decent risk reward. I'm green on this trade now, so I'm going to actually move my stop up to break even, because why risk it? If I get kicked out and I lose, or if I make $5, I'm okay with that. I'd rather, like I said, I would rather always be green rather than risk losing. So I'm green now. This trade is zero stress for me. If it goes up to 100 points, great. If it comes back and takes me out and I get $5 out of it, that's fine too. I accept that. So I'm very aggressive with my stops. I know that, sometimes a little too aggressive. What I'm going to do for this one is, because it looks like a pretty good trade, and that fair value gap is just above us. And earlier I was saying that at the very least we're going to get 50% of that fair value gap, in my opinion. So that the target is 658. We're at 638. There's 20 more points to be had here. So, but I do expect we will get some kind of a pullback. So we just created a bullish fair value gap right here. So there's an equal chance that we pull back to 50% of this bullish fair value gap. So I'm going to move my stop a couple ticks below the 50%, just so it hopefully doesn't get hit. On the other hand, maybe I move my stop up to 50% of the current candle. If I get stopped out and the price drops, then I can re-enter at the lower price. So that seems like a better idea to me. And what I'm going to do is just keep my stop at either below the previous candle's low or at 50% of the current candle's height. Right. So we are attacking the 20 period moving average right now. We just poked through. We're climbing higher. We got 3 soldiers here. That pattern of three white candles in a row. So this is really good. I'm cautiously optimistic. I don't, because this is a long signal for a lot of people. You know what? I'm going to take my profit here. I'm not going to wait. You can't say no to $50. That's like a $500 trade on a mini. So I'm not going to be greedy. I expect that we will continue. My expectation is that we hit 672. That's the expectation here, because we have a previous area, a bounce area there, right? So right back here, I'll circle it on the chart. So right here, we had a wick, we had a swing low. The bot actually took a long trade there, so this was an area of support. Here we broke that area of support, so the support then becomes resistance. So right now we have some resistance right there at that level, 670. We created a fair value gap on the way down on a higher time frame. I think it was the 3-minute chart. Yeah, that was the 3-minute on the 3-minute. So on the 3-minute, we have a really nice fair value gap there, bearish one, and we're attacking it right now. Right, we just attacked it, poked into it, pulled back a little bit. Now we're attacking it again. So at the very least, we should be able to hit 658. But I really do think we're going to go higher. I think we're going to probably hit 670 because that's where the previous bounce was, and that's now resistance. So we'll probably take it up to 670, and then we could see even a push through that. If we push through 670, then we have 2 more targets to the upside here. We have, let's see, where's my target? Here it is. Okay, so we've got the 50 period moving average, we've got the Phoenix average, and then we've got a propulsion block. And then even above that, we've got the 100 period moving average. And we've got this fair value gap way over here as well, this bullish or bearish one, this bearish fair value gap, which we have not taken. Now, that's also where the relative equal highs are. So now I'm really liking this upside target here at 720, which is 70 points above us. So I really like that as a target. However, um, we do have to consider the bigger picture. So if we zoom out here and we draw another trend, a new trend line in here. So I'm actually going to turn off my indicator for a second so I can see my chart better. So I'm gonna draw a new trend line in here. Here we go. And we'll just call that one T2. All right. So yeah, I think this area of resistance is going to be a problem for us unless something happens where the market shakes off all this bad news and it's like, it's all fine, and we decide to go higher, then 720 is the target. But if this push up here is just like a healthy retracement to the upside before continuation to the downside, then we've almost reached our limitation here. So we have this new trend line that I've drawn in here. You see where it intersects the top of the fair value gap. So X marks the spot. Basically right there is where I'm looking for the price to go to. Let's see if we get there. Now, I'm not taking this as a long. You don't want to be taking a long when you're 90%, when 90% of the trade is done, right? Obviously, the trade was down here. Let me just make this FEG plus. There we go. Okay, so we have a bullish fair value gap down here, which we could use to take a long trade if price pulls back to it, which I'm quite sure that it will. So I think I'm starting to like this actually as a short up here. But you know what I said earlier was I had almost hit my daily profit target of $200, and this last trade that we just took, that put me up over my 200. So I'm at 265 on the day. I'm not giving back a single penny of that. So I'm done trading this account for the day. I'm going to switch over to my evals now, and maybe have some fun with my evals. So I've done my duty on my cash account. So this is a good spot for a short, but just understand that we have some more targets above us. So 720 is looking like a really good target. 730 is also a big target. So I think we might be able to get a little higher, but I still like the short. It's just you gotta be careful because you can see that we've got some other upside targets here. Also on the 1 minute we had a bearish fair value gap. So this fair value gap, the bearish one that you see on the screen, that's a 3-minute chart, right? It went kind of through that like it wasn't even there. So that's been mitigated. So I'm just going to gray that out. We don't really care about it anymore. It's been completely mitigated. Um, so we're not even going to worry about that one anymore. So we can draw our attention to the 1-minute FEG, which is right here. And look at that. We're almost at the top. So this is another area for a short. So hang on, let me change the color there. That is a bearish. Okay. So I kind of like the short there. Give me a second here. Having a technical issue. Okay, I'm back. So what was I saying? This looks like another short opportunity right here, but again with just a little bit of caution. Um, Actually, a lot of caution because let's look at what's just happened here over the last 5-10 minutes. We had a really nice bounce. We have a new trend line here. We push through the trend line. We hit a top of a fair value gap. We're pulling back a little bit. I think we can pull back all the way back down to this trend line. And you can see we have a little bullish FVG right in here. So good chance we pull back to that. If we stay in a bullish sort of mindset, then we could probably see something like this, a pullback, a bounce off this, like a retest of this trend line, and then a push up, and then a higher high, and then we reach our ultimate target, which is up here. So I can see that happening. But the thing is, this is a pretty aggressive climb, and we have we got a fair value gap here, we got a fair value gap here, we've got another fair value gap right here. These are all bullish fair value gaps. So we got another one there. So you can see actually the one that we're attacking right now is kind of being attacked. So I think we need to let this resolution happen, find out what this wants to do. Do we want to break down to this trend line and then find a bounce, or are we going to fail, come back into this section down here, and then actually go down here and make lower lows, right? So again, I like to put my mind where the market, like how does the market think, right? How do people react to what the market is doing? And I think no one's expecting a push down. I think we hit the liquidity pool, we swept it, we bounced. So what more is there to do? There's nothing to do. We should just go out for the rest of the day, right? Wrong. That's what the market wants us to think. So I think we could go down here, we get a double bottom, then maybe everyone goes long because they think, oh yeah, it's a double bottom. This is a great long, and then the market's like, haha, fooled you, and then it takes us even lower down to 550. So I like to look at those extreme scenarios. What's the worst that could happen kind of situation. So, but just based on this price action here, this looks pretty bullish. It looks like a V-shaped recovery. We have relative equal highs up here. We have a fair value gap up here. It makes perfect sense for us to go up and tag 720 and even 730. So yeah, we're flagging right now, right? We have a nice push up here and then some consolidation. So this looks like a really nice flag situation. Let me just color that blue. So we got a nice flag, and what happens with a flag? We can actually have a measured move if we take a measurement from the bottom of the flagpole to the top of the flagpole, and then we just copy that over here. And now what we're doing is looking for a breakout of this consolidation period. If we do get a breakout of this consolidation period, then we could see another push up to all the way up to look at what we have up here, the news candle low of the day, which is confluence, right? We have confluence here. So if we do get that move, we could see another push up here, another flag. We could see a third leg up from here, which would take us up to where? Highs of the day, which is actually wouldn't surprise me at all, because what has the market been doing for the last 5 weeks or 4 weeks? It's just been bullish, bullish, bullish. So yeah, this is definitely a possibility. Um, it fits the narrative. Like what we like to see is going from one liquidity pool to another, right? So we've got liquidity up here at these highs, even back as far back here. Actually, even why don't we might as well just go for the all-time highs, right? So yeah, we got liquidity up there. So that's not outside of the realm of possibility. I don't think we're going to get there today, but I mean, it's definitely possible. Definitely possible. All right, so all we can do in the meantime is watch and wait and see what the market actually wants to do. Um, so again, my reverse psychology sort of says, okay, well, we have a flagpole, we have a flag, we have consolidation, we're probably going to break to the upside, and that's exactly why we're not. That's exactly why we're going to probably dump. So that's the way my brain works is I'm always thinking what's everyone else thinking and what does the market know about that and what's the market going to do to make sure the market gets your money, right? So if the market wants to take your money, the best thing the market could do right now is probably dump because this looks like a very nice bullish scenario. And so yeah, if I was the market, I would be looking to dump and maybe even just retrace half of its this bounce. So we had a bounce from here up to here. This is the high. Where's the 50%? 50% is right about here. So this seems like a nice target to me, short term. Let's shoot for this 50%. That'll bring us down to 650, right? We're at 690 right now. We're just a few points away from 700. We could see a fake breakout here, right? We get a fake breakout, push up to 700, and then pull back, and then just drop like a rock. So that's my favorite um, scenario right now, I think. Um, but I have to admit, this bull flag is pretty. It looks pretty like serious business here. So you know, I'm not gonna I'm not gonna bet against a locomotive either. So I'll just use caution. Um, yeah, I'm pretty happy with my profits for the day on my cash account, so I don't think I want to trade that anymore today, but I'm going to pull up my NinjaTrader and my evals and maybe we'll trade some of those. Yeah, yeah, I was at 195 and then I thought this happens to me every time. I'm like, okay, just $5 more. Just we'll make it an even 200, right? And I was like, yeah, I bet you I'm going to lose it all. But I didn't chicken out. I was like, nope, I'm going to go one more trade. So I did the one more trade and it did very well and put me over the 200. So I'm definitely done for the day on my cash account. Tomorrow is another day. So Okay, looks like my favorite scenario played out. Um, I'm going to just attribute that to pure luck. I don't think that I'm even close to being that skilled to call that, but it was just one possible scenario of many, and it just happened to work out very well. So we got a break out of the channel. We got a break out above this trend line, which I have labeled as T2. We came all the way back to this FEG that we had created down here. We entered it, tested it. The 50% barely slowed us down, so we went through that, hit the 78, turn around, went right back up, and excuse me, and it looks like we might be heading back up. So do we want to, is this still target here still in play? Yes, it is. We have a new channel forming here now, so I'm going to label this new channel. What do we want to call these trend lines here? Well, let's call this, we'll just leave them. We'll just leave them as green. I'm going to make them a little thicker so they stand out. Okay, so we have 3 points, right? We've got the bottom swing low here, and then we've got a run up to the this bearish FVG that we had up here. We found a top, actually we pretty much like a double top up there. Rejected, so that's a swing point for the high. Came back down, found support at the FVG, bounced. We have a third swing point. So with these 3 swing points, we can estimate what the next channel is going to look like. So we have what could be a channel. There's nothing saying that we can't just continue down though. Like we could draw another trend line like this, and we could say, okay, well, you know, we have this channel now going down. So we could see a breakdown all the way back down to the liquidity pool, which, to be honest, is my kind of preferred. My gut feeling says we're going lower, but I don't have enough data points yet for that. So we would need to see a clear swing low, like a drop lower, for this channel to actually get drawn in. So since we don't have that data yet, I'm going to go with what data I do have. So the data I have says that we have a channel here. It's a rising channel, which makes sense since we just broke out of a descending channel. And then we still have this target up here that we haven't hit yet. We have this little tiny FEG up here that hasn't been hit yet. So I kind of like the narrative that says we go back up here and take out this target up here and then maybe even go higher. I think this pullback was exactly what I said earlier about basically what's the market expecting here. We have this textbook bull flag, right? This big push up, this consolidation, beautiful consolidation. It's just logical. We should push up, right? And I drew a measured move to the next area where I would expect to get another flag, some more consolidation, and another push up. I still think that can happen. I think that what we're seeing here is pure manipulation, right? This is the market taking people's money. So market is performing 10 out of 10 today. Market is doing its job wonderfully. It's taking people's money right here. So that's exactly what it's supposed to do. So the question now is, are we going to get a push back up here, or are we going to get a push down here? I don't know. So I'm not interested in taking any risky trades here. So I'm just going to watch and observe. Now, this was a pretty significant move down. We know that because we created this bearish fair value gap on the way down. We came back up into it as we would expect it to, and we were rejected, and we're now trading back below it again. We came up for a second attempt just now, tapped it, rejected, right? Or at least what looks like a possible rejection here. If we're to believe that this is true, then really my expectation would be for a move lower. So again, we can do something like this with a measured move. We have a flag pull and a bear flag here. We can estimate where we think price is going to come down to. And then if that plays out, not saying it will, but if if it does, then we could duplicate this whole mess, right? So I'm not really satisfied with that. Let me try this instead. Yeah, this is a little bit better, I think. So why I like that one is because we have so the height of the channel. I do still think that we're going to hit this target up here, but just for the record. But what I also see is the potential here for a quick sell-off too. So I don't know, since I don't know what the market is going to do, I will plan for both scenarios. So if we break above this high and get back into this fair value gap, and particularly if we can close above the 50% of it, then to me that says the market's pretty serious about trying to get it back up here, right? If the market wasn't so serious, it would come up here, tap the 50, and then just sell off down here and just sell off for the rest of the day, in fact, right? So I'm kind of waiting to see intention from the market, what the market wants to do, what kind of mood the market is in. Um, it appears to be interested in going higher right now. We have a possible FVG getting filled right here, or created right here as we speak. Um, so if this holds, we have this candle closes in 10 seconds. So let's see what the next candle does. If the next candle pushes higher and this fair value gap actually does materialize, that would be considered to be, somewhat bullish, right? Mildly bullish. And then we could see a continued push back to this target that I have up here. And I would like that actually. It looks like a pretty decent trade. If you're going to take that trade, make sure you use risk management. We have high or low, right? We have low down here. We have a higher low here. You can draw a trend line from here to here. If we fall below this trend line, get out of the trade. Simple. So that's about a 20-point stop. If you're not comfortable with a 20-point stop, don't take this trade. Wait for the pullback. Since we do have a fair value gap here, there's a really good chance that price will fall back down into it, at least to the 50%, and possibly even to the bottom. So and guess what? Look at where the bottom of this fair value gap is. That's 650, right on the nose. That's a nice big round number. I would say there's a very good chance we're coming back to 650 before going higher. So just be patient. Don't don't be in a hurry to jump in this trade. Like we got this trade and so many other trades happening. If you miss this one and it goes without you, don't worry about it. We have a short waiting right up here. So it's a matter of minutes really before we can take this short. So yeah, but if you're looking for a long scalp, this looks good for a long. We have three white soldiers here, right? These three up close candles. So that's fairly bullish. But again, like I said, I'm looking for a pullback here. We have three possible entries, right? Um, we have this entry at the top of this fair value gap. We have another entry at the middle of the fair value gap, and we have another entry at the bottom of the fair value gap. Also, this 50% retrace from earlier, that could be an entry, which is pretty much where I have my target there. And then this trend line here is the danger zone, right? If we get below that, you should think about maybe, you don't have to put your stop right there, like you maybe want to put your stop below these previous lows or maybe below this low, or if you're really brave, you can even put your stop loss right down here. But that's, 50 points. Why would you risk that much, right? For me personally, I'd go long here. I'd put my stop right there, and I'd be risking literally 3 points. And either I'm right or I'm wrong, right? If I'm right and it goes, great. If I'm wrong, like there, it just hit my hypothetical stop. Big deal. I lost 20 bucks. So what? But yeah, you've got lots of. There's your first entry right there. We just got a hit. So right there. If this is the okay entry, it's not a good entry. It's an okay entry, right? But it is an entry. Um, Down here, we have a better entry, right? Bottom of the bearish fair value gap, 50% of the bullish fair value gap. So this second red circle, that's your better entry. We may not get it, right? Price may not come down and touch it, but there's a good chance that it will. And then of course your best entry would be the bottom of the FEG, complete like a full retracement all the way back down here. These previous candle highs act as your support, right? We came up, we hit some resistance right here at these. If you mark these candle body highs right here, this is where we ran into some resistance, right? We rejected and then we pushed through. So now resistance becomes support. So these two lines here marks a very good discounted price. So if price should come all the way back down and land here, that would be an excellent entry. And we have confluence because that just happens to fall pretty much where this trend line is as well, right? I am going to label these trend lines here now because we've got a couple of things happening. So this one here, I'm going to label it as T1. And I want that to be bigger. This one here, I'm going to label it as T2. And we might even have a T3 developing here. We'll find out shortly. 20. Okay. So what I like to do with these trend lines is I like to mark them as T1, T2, T3, because what I find is that price will always come back to them eventually. So T1 was the first initial trend line that corresponds with this upper trend line, this other trend line over here, which creates the top of an upward channel, right? So we have two parallel lines up there. Oh, okay. Oh, interesting. That should be showing my NinjaTrader chart. You're not seeing my NinjaTrader chart there? Oh, let me check. Yeah, so what it should be showing is it should be showing a TradingView chart with a NinjaTrader chart floating on top of it, but maybe something's glitching out there. Let me just check. Okay, I'll just turn the NinjaTrader chart off completely. So you should see it off the screen now in about 3 seconds, 2 seconds. So you should be seeing only the TradingView chart now. Is that right? Okay, thanks for pointing that out. Okay, so we've got T1 is an upward is a rising channel, and then I've got T2, which is another rising channel. So this is looking more and more interesting. I think we're going to see a touchdown to T1 here. That would be not a bad area for a long entry, but at the same time, it's not going to make me happy if it comes down to T1 because it means that we don't have any support up here. So take that as you will. So here we go. You see where we just tapped? I drew those two green lines in there showing you the support zone, which was the top of these candle body highs. And then we came down exactly to the best entry, what I would call the best entry. So what I would have done here, or what I could do, is take a long with a stop loss below this previous candle's low, or down here with this previous swing low. That would be the smarter place to put a stop, because you could put your stop loss right here below this, one tick below this white candle's wick, right? You could put your stop right there, but you are getting pretty tight on the stop, right? So, but if you went long here at 650, 651, and your stop was right here at 648, you're literally risking 2 points, 2 or 3 points, which is nothing, right? So that would have been the play. That would have been the trade right there. That's if you bought it up here, you're fine. You're fine, but this was the best entry, right? That's the one you want, is the best entry. So I'm happy to see that we did find support, we did get a bounce, and we're back into this channel, the T2 channel. And so what I'm expecting still is, I'm still looking for this target to be hit, right? This FEG up here. The problem is what's preventing us from getting there is the 50% of this FEG, the top of this FEG. So these are areas of resistance right now for us. That's the difficulty to get to this target up here. So you could go long, but you just have to manage your risk. You cannot allow this to come down to here without getting stopped out. You can take a re-entry down here if you want, but the distance between up here and down here is 20 points. So take your lumps up here. If this price comes down here and takes out this previous candle's low, just get out of the trade and wait for the next one, right? It's not worth it to take 20 points of loss. When the price eventually gets down to T1, this trend line down here, which it will eventually, then we could try a long at that point, right? Personally, I want to wait for the best possible trade, and the best possible trade for me is going to be way down here at the liquidity pool at 480. That's not sure if we're going to get there, but that would be a much better trade. Okay, so we were looking like it looks like we might be getting a little bit of a pop here. I do like the risk reward here. I wonder if we get a breakout. If we break higher than 72, then we might have a breakout up to this target, right? This target up at 720. But you see here we got a wick up and then now it's pulling back again. So it's important to wait for confirmation here. We'd need to see, that's why we would wait for a higher high. We did not get the higher high. So the deal is off, right? I'm not loving this trade right now. I still like the entry. I still like the stop placement, but I'm not super optimistic that we're going to be able to get past this. We need to get past this 672 area, right? We need to get above that. But anyway, our market's giving you another opportunity to get in on this long, but I'm liking it less and less because what I would have liked to have seen is a breakdown of the channel, like a little breakdown, a little pullback, like a fake drop, right? Then a turnaround, a pushback up into the channel, which we did get, and then a continuation up, which we're not getting. Right? Instead of a continuation up, we've got all these wicks, right? Those wicks represent resistance, right? They're selling off. It goes up, it pops up, sells off, pops up, sells off. So because of that, I'm not really loving that long trade anymore, right? So here you go. You would have just got stopped out here, and you can actually breathe easy, saying, okay, phew, at least I'm not going to have to take all this pain down here, right? All this drop. We're probably going to come down and revisit revisit this area. Now, the way the fair value gaps work, we have a fair value gap right here. So the way this works is we've traded below it, but we didn't close below it. So we still have to assume that this fair value gap is going to hold us up, right? Even though we did break down, and we see how we came down and just tapped that 50%. So this level came into effect again right here. This target here was just hit right there. So I still like this as a long. I'm just less enthusiastic about it than I was before. But it's still technically a decent long. We're chopping around in the FEG. We might see if we can see like a push up here and get higher highs, that would be like a lot nicer, right? But for the moment, we're getting lower highs, lower lows. We could almost even draw another channel in here, right? So we have a potential channel being formed in here, which we could just chop around here lower and lower until we eventually hit T1 over here. That's the main objective here, is to hit T1. I'm going to move this target. Whoops. I'm going to relocate this target. And so what are we looking for? We're looking for a touchdown to T1, possibly an overshoot. So same thing that happened up here with T2. We broke down, right, out of the channel, tried to get back in, and I was hoping we'd push up to the top. It didn't happen. But we could look for the same thing to happen here with T1. So what do I mean by that? I mean, we come down here, bounce off of T1 and go up, except we don't. What we do instead is we go down here, have a breakdown of T1, or at least what looks like a breakdown. Then we push back up, retest T1, and then actually push back up into the channel and then go higher. So that's kind of what I'm looking for right here, right now. So we're approaching T1. Anyone that has this trend line on their chart is looking at this trend line going, oh, okay, this is great. I'm going to go long right here at 630. And I'm saying, okay, go ahead. I'm not. I'm going to wait to see how price reacts to this FEG here. And I'm prepared to take longs anywhere in this green box with a stop loss under the previous swing low, which is right here. So my stop loss would go here, and then I would take the long. Now it turns out that we did land on T1 and we wicked up and we took off. So that's actually quite bullish, right? That's a very good sign. But for me, I don't trust it. I always want to see that fake out. I think there's a lot of people that just went long, right? I'm thinking this is the reverse psychology thing. I'm thinking there's a lot of people that just went long here and they're thinking, okay, I'm in profit, right? So they're all happy. Well, market's not going to let that go, right? Market's not going to let them keep that that money. It's going to take it back and then it's going to go. So what I'm looking for is, well, actually, you know what? This trend line here might have been that exactly. Hang on a second. Let me move this down here. Yeah, we got too many channels happening here. So we did technically get a little bit of a breakdown right there and then a pop back up into the channel, but we have not tapped this FVG yet. So that's what I'm waiting for, right? I'm waiting for the tap. And then I'll like the long. So anyone who went long here on this trend line probably has their stop loss a couple ticks below this low. So they're about to get removed from the trade. Also, we have more people that went long over here. So market might just come take them out too and then go higher, right? So we'll just have to wait and see. Let's zoom out here and try to get a sense of what's really going on. Hey, you guys in the Discord, do you see anything here? Do you see a pattern? Let me remove some trend lines for you and tell me if you see any pattern in here. Do you see that? There's a pennant. There's a pennant forming, right? Its price is coiling, right? We get tighter and tighter and tighter and tighter and tighter. So textbook, what happens usually in a pennant? It's going to eventually, when the coil gets too tight, it's going to break out in one direction or another. Typically, it breaks out in the direction opposite of whence it came. Where did we come from? We came from above. Where are we going? Probably down lower. So that's the way pennants work. I'll mark this up on the ES so that you can see it. Let's turn all these indicators back on. Let's hide that one. Okay, so here we just have just pure clean price action. So we have a clear trend line there, and then we've got our liquidity pool, which here was swept. So we actually have a couple of things. This could end up being a wedge, like later on. This could also be a W. We could get this kind of thing and then a breakout. So be careful. Don't make assumptions that we're just going to reject here. We have another trend line kind of right here, but I'm going to draw it like this. Remember I was talking earlier about drawing T3 into the mix? So this could be T3 right here. So these usually come in threes. So we have T1 here, and then here we had two bounces, which created a second trend line. So I label that T2, and now we have what could be a breakout. If we get this, if this breakout happens, then what we do is we stretch. we stretch this, and we end up looking at T3, right? And we'll bounce up and up and up. Eventually, T3 will break down, and we'll come back and revisit T2. So that's what I see right now is what's happening. But we need to see a confirmation of this breakout, because if we ignore this T3 line for a moment, because we don't technically have enough points for a trend line there, then what we're dealing with here is just a pennant, right? And so I would expect to see either this top trend line comes down here and creates a downward channel. So then our target becomes here. Or we have a clear channel, or sorry, we have a clear trend line here. Everyone's going to short it here, right? Most people are looking at this going, oh, this is a good short. We'll short it down to here or whatever. And that's why it's probably going to pop to the higher. So I'm going to draw this. I don't know. We'll try to figure out something here with a trend line. See what we can come up with there. I kind of like that. So you could actually take a long here, but where would you put your stop? If you were going to just take a long here for no reason other than what you think you have a gut feeling that it's going to go higher, where would you put your stop loss? You'd have to put it here, right? Previous candles low. And if you were like thinking to yourself, well, price could come back down, take me out, and then go up. Okay, fine, then put it down here then. Right? That's your next best spot for. So that, how many points is that, right? From 39 to 49, it's only 10 points. It's reasonable. Seems reasonable to me. But you don't want to let price fall below this. If price falls below this, you're wrong, right? This breakout is not happening, and you're wrong. So you need to get out of the trade and wait. And then the next long trade would be down here, right? Down here at this target. That's where you would go long. But for the moment, we are getting a little bit of a breakout. So what I could see happening here is we come back down, retest this trend line, and then pop up and hit the top. So that's what I'm looking for right now. So actually, I'm going to mark another important level on the map here. 667.75. Oh wait, that's the ES. I was looking at the NQ. Okay, so this applies to the NQ. This whole I drew it here on the ES because it's cleaner, because my NQ chart's just a mess right now, and I wanted it to be clear. So I'm going to switch back to the NQ chart and see if you can recognize this, what was a pennant, which is now turning into a rising channel, right? That pennant is broken up to the upside. Now, my expectation was that the pennant would break to the downside, because we came from above. And then let's see if I zoom out here. Yeah. So we came from up here, and then we had this sort of pennant forming. And so my expectation was a break to the downside. And that might still happen, right? This could just be a fake breakout. We could just as easily have a violent reaction, come down, retest this trend line, fail, reject, come down here, test this support area, fail, and just keep coming down until we hit the bottom, right? So that could absolutely happen. And that's what stops are for, right? That's what stops are for. They allow you to take trades on a gut feeling and not lose the whole, not blow an account or whatever, right? You lose 10, 20, $30 and that's it. And if you're right, well, then you make 50, 60, 70 bucks. So it's a good risk to reward. So I'm switching back to the NQ, and you can see that pennant right up here. We had a up, a down, and an up. But here, unfortunately, that has been broken. So these two red trend lines that I had marked in here, they're no longer valid. So I'm removing them. And what do we have here now? You remember I was saying my expectation here for T2 was a breakdown of the channel and then get back into the channel and then push higher up into the target. Well, that's exactly what's happening. It just decide to do it a little bit later. So what we did was we traded sideways. We pushed down to the lower trend line. We're pushing back up. What's our target? Right up here. That's the target. And it's got, look at it, it's going at a really good clip, isn't it? Like the momentum here is insane. If you're thinking to go long here, don't, because the move is over, right? You would have wanted to go long down here. That would have been the better move. And where is that? T1, right? So like I said, when T2 broke, you should have immediately immediately been looking at T1 as a possible entry. Now, me personally, I didn't take this trade, and the reason why, because I wanted it to tap this fair value gap, and it never did, right? It came down really close, but it never tapped the fair value gap, so I never touched it. I was waiting for it to pull into the fair value gap. That's where I would have taken my trade, and I would have had my stop right here at this red line. So I missed this whole move because price didn't come low enough, right? If it would have come down to 28, 24, 20, I would have been all in on that one, right? With a stop loss below the previous low. Unfortunately, it never came there, but it did have a nice bounce, or on this on T1, right? So again, with T1 here, it broke below T1, kind of letting everyone think, oh, it's failing, and then it popped right back up and went back into the channel. As soon as this bar happened, as soon as we got this closing bar, and as soon as we started to attack this fair value gap, that probably should have got me into the trade as well. I could have taken a long with a stop. I would have just moved my stop loss up here instead, right? Below the previous swing low right there. That would have been a good trade too. So that's okay. We'll take that information and we'll take that knowledge for the next trade, right? So this looks really good for continuation up. If you're looking to get involved with this trade, there is a chance we can still be part of this trade. It's less likely because we've got such great momentum going on here. But you never know. If it pulls back, where does price become attractive? So there's a few places that you might consider taking along, right? This previous swing high here where we rejected right here. So this is an excellent place to take an entry. I'm going to color this blue. Okay, and I'll make it a little bit thinner here. So actually I'm going to change the word excellent to this is an okay place. Okay, it's not an excellent place. It's an okay place to take an entry. A better place would be the body high, right? So the body high is there. That's a better spot. But it's still not a great spot because we've got fair value gap here. We've got a fair value gap here. And then of course we've got this large fair value gap over here, which by the way was mitigated. So I'm going to shade that gray. The levels are still relevant. It's just we don't give them as much importance. And then we've even got another one right here. So what I was saying was we still have an opportunity to be part of this trade if or when price comes back down to this level, and it looks like it is about to. Now here's the tricky bit. This is a much better price than up here, right? It's trading at 83 when up here it was trading at 708. So that's like 20 points cheaper. So it's a great deal, right? It's an excellent price. And we have not yet achieved target. So we have a reason to believe we're going to continue higher. And this is probably a 1, 2, 3 situation where we go 1, 2, 3, something like that. Okay, that's what we're making an assumption. So how do we know if we're wrong? What if this doesn't play out? When do we know that we're wrong? Well, simple. If we go lower than this previous low, we're wrong, right? If this price drops and drops and drops and goes lower than this previous low, then this whole idea goes out the window, right? So that's where you'd have to put your stop at 630, and we're currently trading at 680. That's huge, right? That's 20, 30, 45 points. It's not really something that I'm willing to be involved with. So the risk reward isn't good enough here. So I would just let this one pass by. But what if we have a channel, and what if that channel does 1, 2, 3, back down to T1, and then we break out of this channel and go higher? What if that happens? So you can see we have lots more opportunities to still be involved in this trade if we're targeting this target up here at 720. So never chase, right? Never chase price. Just let it come to a level that is acceptable for the level of loss that you're willing to take, right? Your risk level, right? Your risk tolerance. So if price came all the way down here to 648, would I then be comfortable with a stop loss at 632? That's just a little over 10 points. I think that's a much better or more reasonable risk rather than going long here just to catch a target that's here when I have all the risk below me, right? There's way more risk below me than there is profit above me. So it's a terrible idea to go long here unless you're going to put a super tight stop in. So if you take this black candle here, for example, if you put your stop loss under there, the chances of you getting taken out and losing are much higher, but you're mitigating risk, right? You're reducing risk because you're only going to lose 5-10 points. So you could take a long here, but just know that there's, a good chance we're coming lower here, like a 50-50 chance at least. So it's all about risk. You can't make money unless you're willing to take risks. So you have to take the risks, but we can minimize those risks. So T2's looking good. I'm just going to extend this up. We came all the way up to T2. We did manage to get back into the channel briefly, and then we lost it again. So it's really, T2 is acting as resistance now. You see here it was support, here it was support, then we lost it. We came down here, came up here, now it's resistance. Now we're down here. If we decide to take another crack at it, it's probably going to come up here, probably hit our target, and then it'll probably reject. Doesn't mean it will reject, it means it'll probably reject. So we can't assume that it's going to reject. We have another, you see T1 here. If we extend T1 and then redraw the upper level T1, because we have a newer, we have newer data points, so we can draw a more accurate trend line now. So you can see here that that target is not exactly the top of the channel, is it? So we can certainly blow past this target right up to T1, and we can even shoot further than T1 and go up to the news candle low, right? We have a news candle at 780. So we have lots of upside targets here, but one target at a time, right? So we got one here, we got one there, we got another one there. We have a news candle high, and then we've got my ultimate high is up at 870, right? Remember earlier I was drawing those flags, those 3 flags up here? That could still happen. It just could happen a lot slower than I anticipated. And I'm not forgetting that we could also go lower and take out this liquidity pool down here. That is not really a consideration unless we break down T1. If T1 gets broken to the downside, then I will be entertaining this liquidity pool down here. But until that happens, I'm pretty bullish right now because look, we've got a low here, higher low here, higher low here, right? So yeah, I'd like to see us take out this target and then come back to T1, fail, and then go lower. That's the plan right now. That's my bias. I'll explain a little bit more about why that is. So here's our first area of support that we landed on down here on point number 1. And then we had a bounce right here. Or we could call it a bounce or an attack on T1. So that was a second attack. And then here we had a third. And so what I'm anticipating now is a fourth. And typically when we have a second or third attack, after the second or third attack is usually when we start to look for the possibility of a breakdown, right? This trend line is not going to hold forever. Every time price comes down and attacks it, there's a chance that it's going to break. So if this comes down and hits this area number 4, that's going to be the fourth attack on this trend line. I'm leaning more towards this trend line breaking down. So what I really want to see before that happens, so my longer term bias is short. I want to see us go down to this 480 level, but before that happens, I want to see us take out these 2 targets up here, right? And these numbers, I'm going to duplicate them up here. So we have 1 attack on the upper trend line, and then number 2 hasn't even happened yet. So because number 2 hasn't happened yet, I'm less sure about these numbers down here. I'm just going to actually remove them because the way it should happen is we got attack 1, attack 1, attack 2, and then we should get attack 3 there and then there, right? So yeah, I think we won't have any problem getting up here and hitting these targets. I feel like it's a matter of time before we just get up there and hit those targets. I could be wrong, but that's what I'm thinking right now. So yeah, getting back to this current trade, things have slowed down quite a bit, but you can see here this first blue trend line that I drew in has been broken to the upside. We have just made a higher high, right? So we had some resistance right here at these wicks. We had, oh, actually, you know what? There's a fair value gap there as well. Let's draw that in there. There's a bearish fair value gap, and we just rejected off of it. So that's not looking good for this target up here. It just kind of cast a shadow. We need to get above this fair value gap in order to have a chance to get to that target up there. So this is, to me, this is looking like we're coming a little bit lower. We're going to probably revisit these two blue lines and then probably go lower. So we have these three fair value gaps below us, begging to get hit, begging to get taken out. So let's see what happens. Let's see what happens. Of course, that means I need to redraw this trend line. And guess what? That means we now have a new channel. New channel forming. So same deal. We can okay, we're attacking that FVG again. So I'm expecting price to hit the top or the bottom of this red trend line. I'd like to come up and hit the top first, and then come back down and hit the bottom, because we have a fair value gap up here, which looks to be showing as good resistance. So a lot of people are going to be shorting it right here, and they're not wrong. I think we are going lower, but the market, if the market's smart, it'll come up here, take out all these stops, right? The people are putting their stops just above this FEG, or maybe even above this candle over here. So I would like to see price come up here to this body high, these two previous candles, that body high right there. So I'd like to see price come up here, tag that, and then reject and come back all the way down here to number 2. And then what would that mean? It would mean attacking this fair value gap down here a second time, because we've already attacked it once. We bounced off of it. So come down here, attack it again a second time. Maybe we go deeper in, like we dig it a little deeper, 50% or even even all the way to the next FEG. Ultimately, the target, this big number 3 down here on T1, the green T1. So far, it's just chopping around. We're getting looks like some consolidation happening in here. So not really a good place to take any trades here because you don't know which way it wants to go, right? So there you go. There's your, see that wick that we just got? Right down, see these 2 blue lines I drew earlier from the previous high? I took from the wick high and the body high. We just tapped it. So that would have been an excellent long scalp with a tight stop, right? The stop would be either below the wick or below the 50% or below the FEG, and it just got hit. So you see how price just came down and we wicked below it. So that, for me personally, I might have been stopped out there. I might have put my stop loss below this previous wick right here. It depends on your risk tolerance, right? It depends how badly do you want to be in this trade. Also, if you're looking at this red trend line T1 here, you would have, obviously you wouldn't want to put your stop so close to a support level, right? You would probably want to take it down, you know, somewhere else, down here maybe, below this next fair value gap. That would probably be, and then you see here we've got this green trend line T1, that's a target. So then you think, okay, well maybe I need to bring it down to down here, right? The further away you put your stop, the less likely it is to get hit, but then you're increasing your risk, obviously. So you need to make that decision on your own if the risk is tolerable or not, right? So yeah, we got a nice bounce there. That's a nice trade. The target is going to be this fair value gap up here. We're probably going to tag these equal highs. You see here we got rejected, rejected, rejected. So we'll probably come up in somewhere in this area. If you take the candle body highs, so where's the highest body high? It's right here, right? So this, you can ignore the wicks and just look at the bodies, right? Look at the candle bodies right here. So this is where I would be like, maybe want to get out of this trade. But here's the thing though, if you're brave enough to stay in this, we got a possible FVG forming here, bullish one. So you know, you could move at this point. You could move your stop up to break even or one tick below this previous candle's wick low, right? Just so you don't have to take risk on and losing money, and then you could just let this percolate, see what it wants to do. Obviously, we have a lot of resistance here. We have a bearish fair value gap here holding us back. We've also got a trend line, right? This red T1 trend line is holding us back. That's kind of like the target, right? You will want to go up here, hit this, reject, come back down to this number 3 down here. That's the plan anyway. So here's number 2. So we had attack on the top, attack on the bottom. And now here's our next attack. Notice how we're consolidating, but we're still going to attack this T1. There we go. We just hit it. Boom. So I like this as a short now. Where would my stop go if I was to take this short? Above this high, right over here. How much risk is that? Well, from 92 up to 707. So it's just a little over 10 points, right? It's 10, 15 points. If you don't like that much risk, don't take the trade. Instead, what you could do instead is wait for price to come up here and then short it there instead. You've just saved yourself 15 points of risk. And now, what's your risk now? Well, if it goes up to this next level, now your risk is from 709 to 717, so approximately 10 points. Maybe that's a more tolerable amount of risk for you, right? So, yeah, I mean, eventually this consolidation area is going to break out. So here's an interesting pattern that we don't see too often. This is very interesting, actually. So right here we have a lower low. From this low over here, we have a lower low. And then right here, we have a higher high, right? From this high over here, this one is just a tiny bit higher, right? Right there. And then here we have a lower low. And then here we have a higher high. We're in the process of creating that higher high right now. So this is called seek and destroy. The algorithm is programmed to take out stops on both sides. So here, anyone that had a stop loss here got taken out here. Anyone over here that had a stop loss up here, they got taken out here. Anyone that went long over here and put their stop loss below that low, they got taken out here. Anyone that went short up here, they just got taken out here. So this is a seek and destroy, and also known as get ready for a rug pull, because when you start seeing these higher high lower low higher high lower low patterns, it's basically your early warning system that something's about to happen. Now, if I had to make a guess as to what's going to happen, I would say we're probably going to break to the upside, because number one, I've got all these targets that we've been sort of looking at, right? Number two, what happened before this consolidation? Like, we've been consolidating here, right? What happened before that? We had a nice push up, right? Nice push up, and we never even came close to taking out these lows. I bet you this is 50%. I'm going to take a fib here and just measure it out from the top to the bottom. And look at that. Boom, 50%. So this, if I would have seen this sooner, this would have been another reason to go long here, was because we came and hit this 50%. That was a really nice trade. We had the 50% and a trend line. The only thing that would have made me a little nervous is that we have a larger trend line below us, right? This T1, the green one, the green T1, that would have given me a little bit of pause, because again, I still think we're looking at a 1, 2, 3 pattern up here. So this red T1, now we broke to the upside, came back, bounced, and we're going above. If we can take out this high, we're probably going to go higher. But if we get back down here and we close in this channel, we're going to come down here to these number threes, right? So that's it's kind of a tricky situation here. We got to be careful. This channel, or sorry, this target up here, it looks very juicy. I really, really want to go up there and take that out. But we also have two channels that we're sort of working with right now. We have the bigger T1 green, and then we have the smaller T1 red. So I'm kind of waiting to see what's going to happen here. Like I said earlier, I would like to go up here, take out these targets, make a second and a third attack on this upper T1 trend line, and then fail, and then come way down here to the liquidity pool. That's what I'd like to see. So far it looks good. We're trying to get up there. Trying to get there. It's a little bit of a slog, but we're getting there. I'm going to extend uh, this old bearish fair value gap. It's been mitigated, so I'll just color it out gray, but it's still relevant in terms of levels. You can see how we came into 50% of it here, went up 50% here, and now we're trading above it, and we're sort of looks like we're maybe breaking out. So this might be a good area for a long scalp. Even though we are nearing the top here, even though this looks like a nice short area, you can still go long here so long as you have good risk management, right? You need to put in a stop loss like right there, literally a point away or 2 points away. And if it pops down and takes you out, oh well, at least you tried, right? So you don't want to be putting your stop way down here. Like we broke out of this red T1 channel, we broke out of it early. We came back, retested it, and now we're breaking out. So this looks pretty legit to me. This looks like it might want to go higher. Of course, you'd be silly not to consider that we're at the high, right? We just tapped it. So this is sort of a liquidity pool in itself, right? You know, on a more micro level. This was resistance. We came up. We just swept it. Anybody that was short here, maybe we'll get taken out. Maybe we sweep higher, right? Maybe we go up here, hit this target, and then we come back down. It's hard to say. Any trade that you take here is going to be either a gamble or a scalp. So you decide. I would recommend a scalp, which means really, really tight stops. So, okay, we're at 707. We have a double top. I think we're going higher. We still have this target up here, right? From back here, we have these relative equal highs right over here. Give me one sec. Okay, sorry about that. Just had a little phone call there. Okay, well, that double top seems to be rejecting. I don't know if I believe that. I really feel strongly that this target needs to get hit. Need is a strong word. The market doesn't have to do anything, obviously, right? But um, this T1, this green T1 channel down here is pretty decent channel, right? We got one, two, three touches on that line. We have a possible pullback happening here right now. We could see it come all the way down to T1, or we could just see it land on this smaller red T1 and then get a bounce here, right? Same support level as earlier. Let's see, let me extend these lines across here. So this could hold. I wouldn't hold my breath though. We got three black soldiers now up here, so that's sort of giving you a warning, like, hey. And also remember what I said about these higher high, lower low pattern. What did I say? It's a warning signal, right, for a rug pull. It's about to happen. So these three down close candles could very easily turn into a 100-point drop. So just be warned, right? I'm not giving up totally on this target up here. I'm just saying if you're going to try to take this target, make sure you have very tight, controlled risk management here because we're looking at a possible rug pull coming, right? We do have a kind of a sloppy W pattern happening here. So we have from here down to here, up to here, down to here, and then here. Then we have the breakout, then we have a pullback, and then we have another breakout, and we have another pullback. So I'm expecting maybe we do this, right? What better way to shake people out? What better way to take out stops than to keep just switching direction every 5 seconds, right? Just you think you're going long, you go long, then you get taken out, right? You get stopped out, and then you go short, and then you get stopped out the other way. So I still think that these targets are legit targets up here, right? But I'm just super cautious, like super cautious. I just feel like we could see a nice rug pull coming. And then, of course, my T1, my beloved T1 down here, I feel like we are going to hit it. It's just not yet, right? It's one of those, yeah, we'll be there soon type of situations. So, yeah, we'll just chill and we'll just keep watching what this is doing here. Like I said, you could go long here if you wanted to, but please, 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 if you're going to go long, use good risk management. Keep those stops tight because, anything could happen, right? Now, this red T1 channel that I drew down here, it's done, right? We came down, we had two attacks. We didn't get the third. I thought we would, but we didn't. We may still get it over here. Sometimes it just comes delayed. But for the moment, we've broken above it. We retested it. We broke higher, came back again, broke higher. See, we just made a higher high. So, I mean, I think this channel is done. So I'm going to just change the color. I'm going to make it like pretty much transparent. I don't want to look at it anymore, but I'm going to leave it there because it may still be relevant. But what I am looking at is a new channel. So if we take the bottom of that and extend it like this, I'm going to go with black on this one. So we have a possible new channel here. We have a swing low here, a swing low there, a swing low there, and then we've got a swing high. So we have a new channel forming now. And if we count the number of bounces or attacks or whatever you want to call it on this channel, I'll just reuse these numbers over here. So here's number 1, here's number 2. So number 3 is probably going to happen over here somewhere. If we just go sideways here and consolidate, then number 3 will get hit, and then we might see a push up, take this target, and then a breakdown of this channel. So I don't know, something like this. So yeah, I'm a real big fan of these, of trading these channels. I think that we're always in the channel. It's just a matter of identifying which channel and where we are in the channel. Like at what stage of the channel are we in? Are we in the beginning of the making of the channel, or are we at the end where the channel is about to break down? So we're like, I'm looking for channels inside of channels inside of channels. Yeah. Hmm. Right. What was your entry? Oh, you should be able to hit that, no problem. We're look at all these targets we've been talking about. So I think 725 is totally doable. But what you need to be worried about is this these relative equal highs and T1, right? Down here we've got T1. So this is your concern here. And while you can see here, we're starting to break down here. So you might, I don't know how, you're down 20 points on that. So, um, hmm, I think if it was me, I would hold because I think that we're going to be hitting number 2 and number 3 here at the top. And we have plenty of upside targets up there. But you can see that it is a bit of a slog right now. Um, technically, I don't know. I thought that was all Trump. Oh, right. I don't know, but I would, if it was me, I would still keep holding. But I'm not saying that you should hold. I'm just saying if it was me, I would keep holding because there's nothing bearish about this right now. Like T1 is uptrend, T2 is an uptrend. So we are in an uptrend. Even though we're pulling back here, we're still technically in an uptrend, right? So here's T1 is this big green trend line, which I fully expect us to hit, right? But at the moment, T2 is still holding strong. I'm going to label this black trend line here as T2 with the red letters. Okay, so T2 has not been violated, and we have one, two, sort of. I don't know if I would count that as three or not. I don't think I would count that as a third. If we pull this like this, yeah. So look at this. Look at this here. Look, look, look. Hold it. Hold it. Don't sell it. Don't sell it. Just move your stop loss under this current candle's wick. So it'd be like 712. If you're like either you can get out flat if you just don't want to get the hell out of the trade, then fine. When it hits 725, yeah, it's just really hurts me to see you sell it here because I know it's going higher. But I mean, I agree with you. If you don't want to take the risk and it's a cash account and you're just happy to get out of the trade, absolutely get out of the trade. You know why? There's a million more trades just around the corner. So it doesn't matter. If you can get out flat, right? Whatever's going to make you feel better. Yeah, yeah. So look at this. This line right here, I'm gonna label it as support question mark. Okay. So this line here was resistance for the longest time. We were like for the last hour or two, we've been just under here consolidating, consolidating. We go up and then go down, then we go up and then we go down. But you know what? Remember what I was saying earlier about the rug pull? We had a lower low, a higher high, a lower low, a higher high. We had a sloppy W, which I pointed out, right? I said we have a W here. It's a little sloppy, but we got to push up and a pull back, a push up and a pull back. So I feel very confident that this target will get hit and more. So the opposite side of T1, like we have T1, this trend line down here, but the opposite side of it is T1 up here. We have a news candle low, right? So we have a news candle low at 780. We have a fair value gap bearish at 758. These are all for me. These are all targets. We have a possible imaginary bull flag setup that I imagine in my head that's also around the 750, 770 area. So I think there's a really good shot at going higher. Unfortunately, there's just as good of a shot as going lower because the whole point of this little thin fair value gap up here, this really thin one, was relative equal highs. We have rejection, 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 and we just tagged it, we swept it, and now we're rejecting. So that's the only thing that scares me here is that we're at relative equal highs, and we've rejected every time, and we just went up, we swept it, and it looks like a possible rejection. But the thing is, it's not a rejection yet. It won't be a rejection until we lose T2, right? Once we've lost T2, like we've closed under it, and we go lower, and then maybe we even break these lows over here at 686, then you can say that, yeah, we definitely got rejected, and we lost support, and we're definitely going to go lower. But that hasn't happened yet. And until it does happen, then I have to remain bullish, right? Because all we've been doing is going up. We bounced here, we bounced here, we bounced here. So if we come down here now, this is going to be the fourth attack on this trend line, which you know how I feel about that. It's, you know, for me, the third attack is where I would like to see a breakdown or a short. Right? And so far, this is going to be, we haven't hit it yet, but we're about to make a fourth attack on this lower trend line. So I can definitely see us losing T2 and then retesting T1, right, down here. So that's the risk. But again, until we actually break down T2, I'm bullish. I have to be bullish. Like there's no reason, you know, to not be bullish. Also, we have T1, we have T2. What's missing? T3. So look at this. I don't want to get your hopes up, but I'm just pointing out what could happen. Okay, I'm not saying it's going to happen. I'm just saying that this could happen, right? So we just hit the FVG, right? We pierced it twice. We pulled back a little bit. We never lost support, and now we're about to hit the target. So here's your chance. You can either get out of the trade here flat, or you can risk it and hold and see if you can get 750 out of it, right? Fair enough. I don't blame you, brother. I don't blame you. Absolutely. If you know, you're about to get it. Why don't you just put your stop at 714, 713, 714? That you're going to risk losing what? 10, 9 points, 11 points, right? 11 points risk. All right. Congrats, man. Congrats. Hey, you know what? Now you feel better. That is worth it, right? Your mental health is the most important thing. But look what's going to happen next, though. This is what you just missed out on. Uh, Man, really, really want to hit the buy button right now just to show you how confident I am about this. But at the same time, it would be really silly to push the buy button at this level. Obviously, we're at the highs, right? But here's the thing. Look at T3. I just drew T3 in there, right? So we have, how many bounces do we have on T3 so far? Just the one, right? So I know that's called mental, that's the mental challenges of trading, right? That's 90% of trading is the mental challenge. You know, you get stuck in a trade, it wears you down, you get upset, and then when you get an opportunity to get out of it flat, you get the hell out of it, and then you watch it run without you, and you're like, oh, I should have stayed in it, right? That's classic. That is absolutely classic. That's what happens. But, you know, it is what it is. So I think this is the last push up before the big dump, before the big rug pull. So when we see this pattern, this lower low, higher high, lower low, higher high, and then this breakout, this is what I believe. I could be wrong, but I believe this is the manipulation before the expansion. So the expansion would be to the downside. I'm expecting expansion. So that means we're going to make new lows on the day. I could be wrong. I could be absolutely wrong. But that's what I'm currently thinking in the back of my mind is what are people less likely to expect right now, right? Look at how strongly we're going up. We've been going up and up. The trend is up. We're rallying. What's not to love, right? Everyone, let's go along together, right? That's exactly what the market wants so that it can trap us, right? The market wants to trap the longs up here. So I feel at any moment that rug pull is going to come, right? Sure. Oh, let me check. I've had my indicators off this whole time. I've been just trading off of price action alone. Let me turn them on. Hmm. Yeah. You know, I'm actually you're right, but I actually see something a little more powerful than the Phoenix average, which is the VWAP. and we have a fair value gap, and we have the 100 period moving average, and we have a propulsion block, and we have the 200 period moving average, and we have a trend line. So I think we're going to 800. I'm just going to put it out there. I think we're going to go to 800. Does that mean I'm going long? Hell no. No, 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 no. I'm interested in shorts. I'm only interested in shorts. So I'll short it at the V. I'll short it at the Phoenix. I'll short it at the VWAP. I'll short it at the 100. I'll short it at the propulsion block, right? I'll short it all the way up. I don't care. But I'm going to be using risk management, right? Say again. Yeah, we got an X. Yeah, we had a beautiful rejection off the Phoenix average. That's a really good catch. Really good catch. So, you know where we're probably going to go is there's a couple of targets now that we have for the downside. The first target is going to be the upside target, which we had at 720. So we just hit it just now. So there, now either we get a bounce here or we go to the bottom of the previous candle's wick low. So the previous candle's body is 712 and the previous candle's wick is 707. We hit 715. So I think we can go, I think we can do better, right? I think we can go lower. The fact that we're actually going higher right now, the fact that we're like, let's just watch price, how price reacts here, because this is going to give us a clue about what price wants to do next, right? No, dude, you literally just got out of a long that you said you were super uncomfortable with. Why would you go long now? Like, no, 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 no. Wait for the, just wait, just chill. Don't do anything. Okay, here we go. This is where I would take a scalp long with a stop below the previous candle's wick. So it's literally like 4, 5, 6 points. Now, keep in mind that we're 700 is a huge number. 700 is a huge number. It's a mental number. We're probably going to tag 700. Just keep that in mind. But you see how this candle, this current candle, we just this is called engulfing because this candle that we just created completely engulfs the previous candle. But we still have 2 minutes left on this candle. So this candle is not closed yet. So it's technically it's not an engulfing candle yet. But if we stay below 707 for the next 2 minutes and 5 seconds, then we have an engulfing candle and we're probably going to go much lower. Now, also, let me remind you, I've been saying this the whole time. I've been looking at T1 saying, I know we're coming back to T1, right? I know we're coming back to T1. And I've got this number 3 marker sitting here waiting patiently for us to come down and probably fail. I expect that T1 will fail on the third attack. Actually, we had the third attack was over here. So this is going to be the fourth attack on T1. So now I've got another level for you guys. The order block is at 690. We just tagged 698. If you want to go long, 690 would be a good place to try for a long. Okay, I'm not saying go long, I'm just saying 690 would be an excellent entry. We have also the 50 period moving average at 695, another excellent place for a long. So we have lots of long options here, right? We've got 59 seconds left on the candle. If you're looking at the 5-minute chart, then you should really wait for the 5-minute candle to close before you take a trade, honestly. If you want to go to a smaller time frame, like if we look at the 3-minute chart, then we can wait 42 seconds and take a trade off of this off of this 3-minute candle instead. Yeah. Um, yeah. See how we got 28 seconds left, and see how the 3-minute candle is starting to bounce off of the 50. This blue trend line here is the 50 period moving average. This green trend line down here is the 20 period moving average, and we also have an order block. I am convinced we're going to hit this order block. I'm like absolutely convinced. If I wasn't at my daily quota, like if I hadn't made my cash for the day, I would probably short this down to the 690 and I put a stop up at 620, or sorry, 720. The hourly candle just closed. Let's have a look. Yeah, yeah, yeah. Let's have a look. Let's have a look. Yeah, so this is super bullish, dude. This is super bullish for the hourly, right? It's like almost like it's like we could do a V-shaped recovery here. So if you want to take a trade on the hourly, then I would do it a scalp. I would start off as a scalp and then maybe see if I wouldn't go long here, honestly, at this point. We're going to go lower, I think. Um, Let me hide some of these trend lines. Okay. Do you see the hour on the hourly candle? There's no wick. There's no wick. Yeah, I agree. I agree with you. It's super bullish. But what I'm also seeing is there's no wick on the hourly candle. The current hourly candle that we just started, there's no wick on the bottom. So what I'm saying is wait for a 50% retracement of the previous candle's body. So you see the candle before it, the body is from 700 down to 659, or so we'll just say 660. I would wait for a pullback to 680. So I want to see this current hourly candle. I want to see it wick back down to the 100 period moving average on the 1 hour chart. That'll take us to around 682. That's your entry. That's your long entry. You'll get a super pump from 680 up to 700. And then if things continue to be bullish for the rest of the day, this order block up here is a no-brainer. It's 742. And then we start running into resistance up here at 790, 795, 800. That's where we start running into resistance. Also, this big, huge black candle, you could draw a trend line from the body high across. That's your target. That's your upside target. This price action will probably push all the way up to the top of this previous long-bodied candle, right to the body's high, and that's your target, and the trade is done. So just be careful though, because that's what we all would think, and that's what we would like to see, but that doesn't mean we can't just go lower. Like if you draw a fib from the top of this, let me see here if I can. I'm going to do this on the ES because the ES chart's cleaner for me. So um, here's my fib. I'm going to clear all these lines. Okay. Yeah, I'm not. I'm not. I'm cautiously optimistic. So let me draw this fib here from the bottom of the last 2 hours of candles to the top, which we just recently hit an hour ago. And you see the 50%? It's right there, right? So if we were super bearish, then we probably would have come up here, hit the 50, and then rejected and went lower. That is probably what would have happened if we were bearish. So the fact that we're trading above the 50 is actually pretty bullish. So I'll give you that. So we came up all the way up here, and then we sort of came down. And so yeah, it's not unrealistic to see that we would maybe go higher from this point. That's reasonable. But you know, never say never, right? Anything could happen. The Phoenix average on the hourly is down at 200. On the ES. I'm to be clear, I'm talking about the ES right now. We're at 6,244. The Phoenix average is at 6,218, and we also have an order block at 6,218. So for me, I'm much more bearish. I feel like we're going lower. We could draw a trend line from this previous high to this candle's high. Here is T1. So for me, I'm bullish right up until this order block at 6,252, and then at that point I'm bearish, right? I could see us do a temporary push up, hit the order block, reverse, come back down, and then we're looking to come back down and hit the Phoenix average and the order block down here at 6,220 on the ES. So the NQ chart is going to look very similar. It's just that I've got so much crap on my NQ chart. It's a little bit harder to see all that stuff, but same idea there. So here, what I'm going to do, I'll just reset this chart. I'll just delete everything off of it, so we have a nice clean slate. The one thing that I didn't, yeah. So here's another interesting, actually very interesting on the NQ. You see on the 1 hour chart, I have a T1. This trend line goes all the way back to June 23rd. Okay, so like 7-8 days we've been on this trend line. Today we broke it, right? Today this trend T1 failed today, and we dropped and dropped and dropped, and we dropped pretty hard. Like we had a nice wick down here, and now we're reversing. Guess where we're going? back to T1. It's 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 normal for when we lose a major trend line like this, like when we lose that, it's normal to drop, go back up, retest it, and then reject and continue down. That's normal. That's textbook. Okay. So so we're doing that right now. So I'm very short-term bullish. Like I don't even know if we're going to get above this order block at 742. So if you, okay, we'll see. We'll see. I don't think so, bro. I don't think so. Um, you know, the VWAP on the 1 hour is at that order block. Like there's too many things that are close to this order block that makes me think we're not going to get through it. But the only thing that makes me think we might get through it is that these two bullish hourly candles. So if the next hour is also bullish, then yeah, I could see us hitting T1 easily, you know, 22,800. And that would fit the narrative for the last 3-4 weeks, right? This would be considered a nice healthy pullback before a continuation upwards. If this was a 1 minute chart, I would say that we might even get back into the channel and push up to new highs and go up to 23,000. Why not, right? Why not? So I guess we'll just have to wait and see. So in the meantime, let's go to the lower time frames. Let's check out the 15-minute chart. So a 15-minute chart also looking bullish. We have a propulsion block here at 748.5. So I would say that's a really good upside target. I wish I had seen this 10 minutes ago. I would have been long with you. For the record, when you were freaking out about your long trade and you wanted to get out flat, for the record, I did say, "Are you sure? Are you sure? It looks really bullish to me. I think we're going higher." I did say that, right? But at the end of it, I was like, you know what? It's not worth your mental distress. Not worth it. Get out of the trade. There's a million more trades around the corner. Like we have a short trade coming up in a few minutes here. So who cares if you miss this trade, right? Who cares? There's another one coming around the corner. Yeah, no, I get it, and that's, you shouldn't have allowed it to get that bad in the first place, but because not only did it cause you mental anguish, but it also stole time because the whole time you were waiting to get out of that trade, you missed out on a lot of trading opportunities you could have taken, and you probably could have made more money. But anyway, luck was with you. You got an opportunity to get out flat. You took it. That was a wise choice because there's no guarantee that we would go higher. So I think it was a wise choice to just be like, you know what, I'm going to get out flat here. So, and did I mention that I'm not actually that bullish? Like I am kind of bearish. I'm tempted to take a short right here, right now. But the reason I'm not, yeah, it's too hard. There's so many arguments for why we're going higher, and there's so many arguments for why we're going lower. So really, we just have to trade what we see, right? Look at, I'm gonna, I know, but let me show you something else though. We just hit the 50%. Did we see any kind of rejection, any kind of reaction at all at this 50%? No, we didn't. We didn't. We just plowed through. You know what that says to me? Stop sweep. Like you look at the huge wick on this candle. We wicked up, we wicked down. Now look where we're trading right now. We're trading at the previous candles, the previous 15-minute candles wick high. For me, this is a very, very beautiful short right here, right now. The only reason I'm not taking it is because we have a propulsion block above us, we have a VWAP above us, we have the Phoenix average above us, we have the 50-period moving average, the 200, the 100. We have all these levels. We have a trend line. That's the only reason I'm not shorting this right now, is because I think we're going to go up and tag at least one or two of these targets up here first before we pull back. Oh, look what's happening now. Look what's happening now. Literally, right after I'm like, this is a really good short, and then look what's happening. It's pulling back, right? It just pulled back 12 points, dude. 12 points it just pulled back. So here's a little trick. Here's a little trick. If you draw if you draw a fib from the bottom of the current 15-minute candle to the top of the 15-minute candle, like that, see the 50% right here? Draw a line across. Now let's switch to the 1 minute. And now you have a little bit more granular context here. You can see there's a fair value gap right here. So I would say, and the 50% is in the middle of the fair value gap. You see how that is coincidental? So this 50% fib represents a 15-minute candle. We have a fair value gap in the middle, and the 50% of the fair value gap is literally like 25 cents away from the 50% fib on the current 15-minute candle. So if you like this and if you feel like you want to go long, you could take a long entry at 721.75. Personally, I am not, because on the 1 minute chart, the Phoenix average is at 713 and the order block is at 708. So that is where I would take, that's the better long. So I'm just going to go AFK for a minute. I'll be right back, but keep your eye on the Phoenix average, 710, 712 area. Keep your eye on that and that order block at 708. I think that's a good area that you might want to consider taking a long. Yeah, I'll be right back. Okay, I'm back for 7 minutes and then I'm gonna go get my tea. 766. 766. I don't mind that target. Let me see what we got up there. 76. Oh, by any chance, are you looking at the pivots, daily pivots? Oh, okay. Well, that's actually a very good number because we actually have a daily pivot up there at 767 and a quarter. Let me draw that on the chart. 767 and a quarter right there. That is that's actually a support pivot, support one. So we were actually quite far below the daily pivot. We're even below support one pivot, but that's besides the point. So yeah, that's a good target. It's a little lofty, but I think we can definitely get there, especially if we continue on with this bullishness that we've been seeing. So do you see that value I was calling out earlier? We haven't actually hit it yet, but we were really close to hitting it. So there was an order block. Remember I was saying we had an order. Pardon? Yeah, I mean, I was calling out this order block here at 727. That was my first long idea and like my idea for a long entry. But the thing is, then I saw that we had a fair value gap below. So then I changed my mind. I was like, oh, actually, we got this fair value gap here, so probably we'll come in and we'll bite into it. Maybe we hit the 50%, which we just did, by the way. Hang on a second, I got to take a long here. Where's my, let's see here. Where do I want to go long? Sure, let's do it. Let's do it.
Drop
Okay.
order filled.
Whoa, okay, I didn't mean to do that. That was a mistake. Okay, I accidentally.
Target filled.
Oh shit.
Drop order filled.
Okay, guys, lesson number one. Before you hit the buy button, make sure that you're not trading minis instead of micros. I meant to buy one micro and I bought 7 minis. I almost blew my account with that last one. Oh my goodness. Anyway, I accidentally just made 156 bucks. So I meant to go long one mini there, and that freaked me out. So I just exited the trade as fast as I could as soon as I saw my mistake there. But you can see it's working out quite well, man. That would have been such a sweet little trade. Whew. Lesson learned. Okay, let me set up my NinjaTrader. I got the wrong ATM set. I have the wrong instrument set. I gotta fix that so I don't blow my account. Whew, that was lucky. I almost blew an account there. Okay, we're good to go. That was scary. That was scary. Okay, so now I like this as a short, just so you know. The long trade is over. That scalp is over. It's done. So we're probably going to go lower now. Um, Targeting the Phoenix average. I'm targeting 716 right now mentally. I'm not in any trade. I'm not taking any trade, but um, let's see what's going to happen here. No, well, okay, so okay, we hit the 50. Do you see my chart? Do you see the 50% that I marked out 5 minutes ago before I left, before I went AFK? I marked this on the chart 5 minutes ago. Okay, I marked out the 50. I marked out the fair value gap. I called out the 50% of the fair value gap. I said, watch for a pullback. We have what's that word? It always slips me. Confluence. We've got confluence here, right? We have a fair value gap. We have a 50% retracement, and then just below it we have the Phoenix average, the 200, and the 50. And then below that we've got an order block. So I liked this trade. I just didn't love it. I would have loved it more if it had come down to the order block at 708 or the 100 period moving at 706. That one I would have been much more excited about. This one here, I took it only as a scalp. Basically, I was looking for a reaction off of the 50% and the 50% of the FVG and the 50% retrace of that push up. We got the reaction. I got in, I got out. Trade's done. The fact that it's continuing higher is besides the point. So we're going to run into resistance here at 751.75. That's where the VWAP is. So that would be, well, don't be greedy, bud. Don't be greedy. In fact, I would ask you to please take some profits here at somewhere between 44 and 52. 44 to 52. How many contracts did you take? Huh? One? Oh, I see. Well, okay. You know what? You're in control. It's your trade. You do you. Um, what what you could do, what you could do is you could do a trailing stop, right? You could put a trailing stop below the previous candle's low, and then that way, if like, it just got stopped, you would have just got stopped out. So there, you would have money in your pocket right now, and then whatever comes next, you wouldn't have to cry about it because I tried to warn you. I tried to warn you. But I mean, the VWAP is still there. We haven't tagged the VWAP yet, right? So 751 is still on the table. So don't panic just because we're getting a little pullback. That fair value gap is still in play. We hit the 50% of it. We could go back for another test. We never hit the Phoenix average. We never hit the 200 period moving average. So all of those targets are still in play, right? Nope, nope. This is the 1 minute. Yeah, it's the 1 minute. Well, let's look at the 3 minute then. Let's look at the 3 minute. The Phoenix is below us at 728, and the FVG is below us at 726. So those would be areas where you would consider maybe going long. But again, scalping, not not long and strong. I got to go AFK again. My tea is ready. I'll be right back. Okay, I'm back. So we just hit the Phoenix average on the 3 minute. So there you go. That's what I was waiting for. But we haven't hit the FEG. We haven't hit the order block. The order block is really, for me personally, the order block is the only one that matters. 718.5. So it's approaching very fast. Let's see how price reacts. If I was a gambler, I would go long here, but I'm not a gambler, so I'm not going to go long. I'm just going to watch. But we just hit the order block, bud, right there. There you go. 718.5. That's where the gambling part of me would be like, okay, let's go long. But I'm not going long because the 50 is below us. There we go. Now we just hit the 50. Sorry, the 20. The 20 is what I meant to say. Now, can we hit the 50, which is at 709? That's the question. Oh, yeah, that was a good trade. So I just took a long. Um, I got a 10, 15 point stop here. I'm not super excited about this long, but I'm willing to put risk on the table though, right? I'm willing to put risk on the table. And I moved my stop up to break even. Worst case scenario is I'm going to walk away with 15 bucks. So
Stop fill.
Okay, I got stopped out plus 50 bucks. There you go. I think it's going higher, but I'm not gonna chase it. I'm done. I'll wait for use caution here on any longs. I see potential for a huge drop. I want to remind you what I was talking about. Like we haven't hit the VWAP yet. That's the only reason I think we're going higher. But let me remind you what I was talking about earlier when we were consolidating and we had that higher high, lower low pattern, and then we started to push up. And I said I think that this is a manipulation to the upside before the expansion to the downside. You remember that? So at some point we are going to max out, right? Now, logically, everybody is looking at the chart. Everybody knows that we're going to go hit the VWAP. Everyone knows that. So everyone's long. So why would the market continue to push higher? Why? Why would it do that? Why not just drop right now? Catch all the people that are long, trap them up here, and then make brand new lows on the day. Wouldn't that be the smartest thing for the market to do? Okay, tell me what you're thinking. Yeah, yeah. No, that's a great idea. That's a great strategy, except the market's already thought of that, right? The market knows that everyone's going to sell it before it actually gets to the VWAP, right? Because they don't want to. Everyone knows that everyone's going to sell it at the VWAP. So what does everyone do? They sell it a few points before the VWAP. So that's old news. That's an old trick, right? Market already knows that. It's not going to go to the VWAP. It might have already hit the high, like 745. That was it. Like maybe we're done. Now, here's the thing. Are we selling off rapidly? Are we dropping like a rock? No, we're not. So I'm not going to panic yet, right? I'm not panicking yet because, yeah, it could be, or it could be a taste of what's to come. So we'll see. We did not close below the fair value gap, right? We poked below it, but we didn't close below it. Same with the 20 period moving average. We tapped it and then we bounced off it. We got a nice reaction off of it to the upside. So that's good. That's all good and well. But I just don't trust the market. I think that this whole thing, the last hour of trading has been the manipulation to the upside. Now I think we're done. We hit a top and we're making lower lows. So um, I'm going to bring up my 10-second chart for a second here because okay, we're about to hit the 50 period moving average at 710. If you're interested in a long, this could be a long. You would have your stop below the swing low at around 697, which is about a 13-point stop. Good risk reward. Just please use good risk management. Don't allow a losing trade to become an account blower, right? You don't want to blow an account just because you were not willing to take a loss. So um, if you want the safer trade, just don't take any trade right now. There's better trades coming. I see a really nice trade coming down at 675 here in just a few minutes. So don't don't think like you're missing out on something. Um, I'm still eyeing your target 766 or 767. I still think that that's a great target. I don't think it's a terrible target. I'm just not sure if we're going to get there. We're making lower lows. We should get a bounce here off of the 50. So right here at 710, I use the word should loosely, right? The market doesn't have to do anything, but if the market wants to go up, this would be a good spot to bounce. Let's put it that way. So but I don't think we're done. I think we're going lower because I'm watching my 10-second chart and I'm seeing some patterns very similar to the patterns we've been discussing here on my 1-minute chart, but I'm seeing the same patterns on my 10-second chart, and they say that we're going lower. So I'm just going to chill. On a micro time frame, we have a liquidity pool at 697.75. So I would look for that to get swept. Okay, just a heads up for you. 695 looks good, maybe. We'll see if we can get there. There's no guarantee that we get there. Maybe we just go up from here, right? It's hard to say. I will say that if we break above 730, 730, if we close above that, then we're probably going to go higher. But if we don't, then I'm assuming we're going lower. 710 is my next target. After that, 700. After that, 695, and then I'll start looking for some long scalps at that point. AFK for a sec. I'll be right back. Well, how about if you do that while I wind things down over here? Maybe after the feud and after you find three games that you might like to play, and then we'll pick one. Okay, boys and girls, I am back. We have right. Um, okay, so here's the thing. Um, do you guys see? I just switched over to my NinjaTrader chart. Are you guys seeing that? Okay, so we have a liquidity pool over here. Okay, several in fact. We haven't hit them yet. The name of the game is patience. So that's what I'm waiting for. However, we have a possible breakout happening here right now. Okay. So let me ask you, at what price would we have to get to convince me or you that we're definitely going higher? Because right now, all I see is a trend line keeping us down. We just tried to get above it, rejected. Got above it here, rejected again. Trying again to get above it. So at what price would we say that, okay, this looks good, like we're going to go long?
Thought that order filled.
So what I'm seeing here on a micro level is T1. Okay, this line right here is T1. This line here is T2. And I have a stop loss here in place in case I'm wrong. So I'm going to put it right there below the most recent low, which was right here, 713. I'm up 35 bucks, so I'm just going to go ahead and lock that in. Probably going to get stopped out, but that's okay.
Stop filled.
There you go. I got stopped out. So that's fine. I tried. The thing is that it could have just rocketed, right? We had, because this trend line here, we broke above it. So we just came back, we retested it, and we're pushing. So this is a breakout just waiting to happen. This is a breakout begging to be happening, right? But the thing is, it could also just be a channel. We could just chop up and down here like this, right? So what I'm really interested is I want to trade the breakouts, right? For the scalps, I want there to be some really fast moving price action. This is not fast moving. This is chop, 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 right? So even here, we just got a pop. But should I get excited about it? Not really, because it's just, this could just be the top of the channel. See here how we're rejecting already? So, I mean, I was excited right down here for a brief second when I saw this spike down and then it pushed back up. I got excited and I went long, and I made what, $5 or something? Not very much. I got stuffed out, but I wasn't willing to risk being 10, 20, 30, 40, $50 in the hole because I think we're going lower. So we have support here. We have resistance here, and we're chopping. So I'm looking for any really obvious break out of this consolidation zone. Like if we get a huge candle right here going up, oops, my line there, then I might reconsider. But for the moment, I'm really not too interested in anything here. You see here, we're just going to pull back now. So you could take a scalp long here, but I wouldn't, because I see this trend line down here needing to be tested. I see these three lows, this double bottom, I see that needing to be tested. I also see these liquidity pools down here, micro liquidity pools, but well, we'll see. Yeah, we'll see. So here we go. Here was our breakdown on the second bounce, and here's our push up. Do we get a breakout now? Do we get a breakout? Do we get a breakout? Seems to be just dicking around with us here. Nope, you see, it's not happening. So again, I go back to my original question. At what price would price need to get to convince you or I that, oh, okay, we're definitely going higher? Because like right here, we have resistance, right? So do you know what I really like about this level right here, 730? It is a 50% retrace of the drop. You see I have a fib right over here. Actually, let me fix that. Let me drop it down even further because the fib has moved. Okay. Yeah, so I like this as a short because we just came up here, tapped the 50%, poked above it, and then rejected. And so for me, this is more of a short than a long, but let's see what happens. I mean, this white trend line up here is definitely resistance at the moment. If we can get above it and close above it, then I think that we have the enough strength to at least get back to the top right up here, right? 743. So yeah, I don't know. Let's see. I'm gonna make an adjustment here to this trend line because T1 was violated just briefly here. So we made a lower trend line. So what I want to see now is, are we going to make another lower trend line? And if we do, will that be followed up by another lower trend line and another and another? So I'm seeing all kinds of possibilities here. I'm not seeing anything really convincing. So I'm not gonna I'm not going to entertain any trades here. Yeah, I don't know. So I'm going to switch back to, I really think that this is setting up for a short here, but we have not yet tapped that VWAP, right? VWAP is at 750. We never touched it. Are we dropping like a rock? No. Are we selling off? No. Does it look really bearish here? No. So I have no reason to short it, other than my gut saying this looks like a good short. But yeah, there's really no evidence. So in fact, there's evidence pointing that we are actually maybe going to go higher. So let me delete some of these trend lines. And then, so from this low to this wick low to this wick low, we actually maybe have a channel. This is the 10-second chart again, just a reminder. So we're kind of micro trading here. But yeah, so I do see a possibility for a push here up to this level, and then a rejection up here close to these highs. But this is just so, I don't know. It doesn't feel, I'm not going to spend all my time on the 10-second chart, put it that way. So I'm going to switch back to I only use my 10-second chart for super granular decision making, right? If I want it like right to the penny, I'll go into the 10-second chart to find a pattern inside of a pattern inside of a pattern. But for now, I'm done with it. I don't see any real trade that I'm interested in there, so I'm going to just switch back to my TradingView chart. So the TradingView chart looks bullish, right? On the 1 minute, it looks bullish. So this just looks like a nice little pullback. We got a nice little bounce on the 50-period moving average and the 20-period moving average. So that's the blue and the green trend line there. What's holding us back is the 100-period moving average and the Phoenix average, right? So let's see what happens here. But anyway, sorry to announce, I just got a opportunity to go play some video games with my daughter, and I cannot pass that up. I have to spend some time with my daughter and play some video games. So I'm gonna retire for the day, and it was a good day. This is the first time I've stopped trading early, but it's not very often that I get an opportunity to play video games with my daughter. So I'm gonna go do that. So I'm gonna tell you guys to have a great rest of your day. I'll probably be back this evening, either at market close or at the market reopen at 6 p.m. Eastern. If not then maybe later, uh, midnight or something. If not then I'll see you guys in the morning. So I hope you guys have a great rest of your day trading. Be safe. Use stops, please. Use stops. Okay. Take care. And actually, you know what I'm going to do is I'll leave the stream running so that you guys can enjoy the chart and the bot taking its trades. I'll leave the stream running, but I'm just going to be off the air for the next few hours. So, okay. I'll talk to you guys later.